Hi everyone, and good evening, good morning, good afternoon, wherever you are in the world. It's Wednesday. It's the 11th of June. I hope you're all well. I hope your pips are on the right side of positivity. It's inflation data, the key data of the day. Of the day and also of the week. We've got PPI tomorrow, Producer Price Index, but CPI, Consumer Price Index, is coming from the US in a little over 15 minutes. We've got a key week. Obviously, we've had these trade talks with China and the US ongoing here in, I'm going to say sunny London because it is sunny at the moment. It's been dull most of the week. But 20 odd hours of face-to-face talks between the trade representatives of the United States and China came to an end last night. They're calling it rocks for chips deal. These rare earth minerals that are so vital to the US and other obviously global nations. China being a huge geographical country, along with Canada, Russia, and America as well. These big countries, potentially have some big resources underground, and China's exercising that. So Trump has just tweeted as well, or social media, whatever it's called, Truth Socialed, that the deal with China is done. And we'll see where we go. But as ever, as ever with these things, especially if we're talking about the president, there's not a lot of detail, is there? They've agreed to this sort of thing in the past, and nothing's really come of it. The Americans have accused the Chinese of reneging on deals in the past, and there's obviously an element of truth in that as well. So let's see what happens. As far as the market's concerned, as far as making money in the market, we are still long three key indices. The Nikkei has just hit our first target from the 9th when we was at the other night. That's quite nice. I don't know, there's obviously big numbers involved in the Nikkei, but it's still about a 2% gain on that. I'm going to, as we're here now, I'm just going to move this stop loss up to the, actually I'll move it up just shy of entry now on the 4-hour chart. So it's just shy of entry. So 50% of that position will be closed on the Nikkei. That's how those indices ones are set up. Let's just run through these and we'll come back to the data in a minute. The other open positions we have at the moment is the FTSE 100 from yesterday. It was going all over the place, and that's sort of, this is looking, I'm looking for new all-time highs here. I didn't actually set a target yesterday. I've actually poked on here on this chart and on my trading platform as well, around just shy of the 8,000. I think it was 8,900, wasn't it? It's a new all-time high. I'm expecting potentially on the FTSE 8,903. But I may close that out early because it's sort of, it's moved higher. We're in the money. No, we're not. We're out of the money at the moment, aren't we? Let's just go back to the 1-hour chart. I think we're out of the money. There we are. There's our entry here, and we're actually out of the money at the moment. We're at 8,856. So that one's out of the money at the moment. But yeah, so I might. Well, I'm not going to close that yet, but we see how we react to this CPI data across the board. The Nikkei we looked at, and the only US market we've got open at the moment is the Dow, which is that right? Is it Dow? Make sure I'm talking the right thing. Yeah, the Dow, the other two we closed earlier. So again, another one that was in the money and out of the money. This is very much in the money. This is a half a position from way back on the 27th of May. So very much in the money. This is the original first target we got to. We're still sort of smacking through that at the moment. We can't really move away from that. You can see there. And so, sorry, let's move that. Again, another one I may close, but there's the volatility in this last hour after that announcement and Trump's oh God, I can't get the words out today. Trump's social media post. RSI is completely flat there at 48, flat max. I might just close this one actually here. That's the hourly. Just close it because I'm getting a bit bored with it. To say we had 4 hours. I should have just closed the whole thing when it ran to first target. Now I folded it. I think I'll let you know on Discord group where I've closed out. But anyway, that's again very much in the money. Actually, I mean, patience is key, isn't it? I tell everybody, let's just move the stop loss up initially to the 4-hour 50 period moving average there. So the stop loss has been moved up now on that to 42488.98 here on our platform. on the Dow. Let's see if we get a big reaction from the inflation data. And just whilst we're looking at the charts and stuff that's open, the other position from last night was a long on the euro pound, having a really look at the day yesterday. We look at the candle. I was itching to get in this earlier during the day because that was a big positive candle yesterday, euro pound, where I followed through today, and my target is up here just shy of 0.85. It's a big line in the sand, 0.85 and 0.86. You can see there's 86 there on euro pound, but it's over the 50 daily moving average. So I might, if this keeps moving higher, I might close that out as we get to the because that's a key resistance at 50 day moving average. So again, it's in the money. It's not one that really moves like that, but yesterday's move caught my eye and it triggered on my system, and we were long on that. So that's in the money as well. We were long from 84.59.50. We got in and we're at 84.72. So I know 10, 12 pips out of that one, but not one I normally trade euro pound because it's a bit of a sideways action. Obviously, keep an eye on it when I'm moving funds from euros to sterling. But 50-day moving average approach, again, another one I might be closing out as the day moves on. So anyway, let's get to the key data of the day. What we're waiting for is the key data of the week as well. The core CPI data expected to tick up to 0.3 of 1% from 0.2 of 1%. The headline for May is 2.9% from 2.8%. Impact of the tariffs, because a lot of the tariffs are on, is still somewhat negligible. We might be waiting into June, and even obviously the second half of next year, this year will be key. But so far, the data has really held up, hasn't it? It's been the sentiment that's collapsed, but we might see some sort of rise in that with those PMI data in particular. But let's see what inflation looks like in the short term. The other big event today, the big another three candle event here, or three bull event here on the investing.com's calendar, is the 10-year auction. We're currently at 4.4960, so 4.4960, so nearly 4.5% yield on a 10-year note from the United States Treasury. So let's see how much of this is taken up, how healthy it is, how many overseas banks, that's the key thing, the overseas central banks, how much of that is being taken up so far this year. It's been okay. Let me just go back to let's go back to the Forex Factory calendar. I'll come back to this in a minute. Where's the auction gone? Why isn't it on there? Why isn't that red on your? That's weird, isn't it? Let's filter. Let's change it to the medium. Apply filter. It hasn't got the 10-year. What are we doing? We are Wednesday. Sorry, I'm just going to try and get this before the date comes out. We've got 4 minutes to play with, haven't we? PPI, CPI. Yeah, the bond auction here. So as we say, it went at 434 last time, but at 2.6%. So remember, market is currently nearly 4.5% on the 10-year. So could be very well. It's very, very interesting how much is going to get taken up, and say it's the foreign banks really perception of that, how much they're investing in the US still. Remember, there's been this move, certainly in the equity markets, away from highly valued US stocks earlier in the year. We had that collapse to the low in April. We've bounced back to where we are now. We sort of bought all of that back in the stock market. So we still got relatively highly valued US stocks, but that's still for many the key growth area. So see how much foreign central banks are taking up the purchases of US Treasuries today. And then tomorrow we got the GDP tomorrow, but the other key thing out of the US tomorrow as well is the 30-year auction, a longer holding period. So 4.82 for that last time, 2.3 trillion of notes available tomorrow. So, but see this later on today. This is at 6 o'clock my time. That's 5 o'clock, 1500 hours GMT, and 8 o'clock if you're in sunny Cyprus, my friend. So CPI, let's have a look what that looks like. Obviously, a direct impact on the dollar, direct impact on the yield curve, the inflation. it's the most commonly accepted measure of inflation in nation's economy. But as we say every month, as far as the technicians at the FOMC, the Federal Open Market Committee, the guys at the Fed in Washington, they hold more store by the PCE, the Personal Consumption and Expenditure Report that comes out at the end of the month. But this is the key one to start the data for May. So obviously we've had some tariffs being implemented since 2nd of April. Obviously, they're much more muted. Trump in his tweet talked about overall 55% tariffs on China today. So yeah, it's come down massively, obviously, from that 145% tariffs. He's also had an apology from his ex-buddy, his ex-bro, his former best mate, Mr. Musk, who says this morning he's gone a little bit too far with some of his comments. But anyway, 30 seconds to the data. So let's have a look what this looks like. And let's just bring up the euro is probably the best. In fact, the stock markets might be as well, but let's have a look at the euro. 114.35 at the moment. Let's drill right down to this 5-minute chart, or let's go to the 2-minute chart. So 114.20 was a key area, and see how the euro reacts to this data coming across the screen. So ticking down. Core number, the annualized number as well is key. Remember, we strip out the energy and the food costs, give you the core number that's been coming down. Is there some signs of goods inflation? Remember, that's a collapse completely. So annualized is coming worse than last month, but better than expected at 2.4%, 1.0 so it's cooler again. Again, I'm sure that social media will be kicking off now from the administration about how good there's no inflation. He's already said that once, the president. So core 0.1% for May and 0.1% for the headline number as well, both much better than expected. And the overall annualized number, 2.4%, from 2.3%, but not as high as expected at 2.5%. So the immediate impact should be a weaker dollar, and that's exactly what we're seeing. 114.70 for the euro from this 114.34 move. So some significant moves against the dollar. Stock market should move in the opposite direction to that. Let's have a look at our Dow position. There we go. Moving higher, the Nasdaq instantly over 22,000, Nasdaq 100 over 22,000. Wider markets, it's also helped our yen. So you'll see the gap. We talked about gaps yesterday, didn't we? There we go. Surprise there on the so positive. So inflation disappearing. The White House will be cock-a-hoot on that, because that's what grabs the headlines. Same here on our FTSE. Positions leaping up, so I'll be dragging those stop losses up later on if we can hold these gains. Obviously it then be evaporated instantly, but that's a good number. So let's just go back to our calendar. We'll see a bit more detail on our calendar. If I refresh this, we'll see some of these details here. Just bear with me for that to refresh, but that's positive news for the administration in Washington. So we got a weaker dollar, stronger stock markets, and we'll see what that's done to the yield as well. Where are we? Wednesday. There we are. So that's just to recap. 1.1 of 1% from 0.2 of 1% for the monthly number. Annualized, that brings it down to 2.8% for the core. That's quite a good move. It was expected to move up. It's not as bad as expected. It's in line with expectations. The number for May did tick up by one. Well, it's been rounded up to 0.4 from 0.23. Looking at the data here, but it was much less than the point. I'm saying much less. It was significantly less, given that it was 2.5% coming in at 2.4. And the key one is the core numbers, as we said earlier, at the top, up the top here. Which is a surprise to the downside. Seasonally adjusted is also ticked more or less in line with expectation. That's nothing really going to move. Earnings 0.3, interesting. That's better than was expecting higher. So earnings are still holding up. So real earnings 0.3 of 1% for May. Bad news there for Canadian permits, but we'll see. But that's certainly hit the dollar. As we've just seen. So the FTSE, obviously FTSE's up. The DAX presumably has done the similar thing on the 5-minute. Yeah, DAX through 24,000 for 24,150 at one point on the DAX. Let's go back to the Forex market. Have a look at actually, let's have a look at gold on the way through. Gold is lifted on the weaker dollar significantly. We were long. This was just why we got the gold market here. If you weren't with me, we were short this, weren't we? And got out this morning. Sorry, take it to the hourly chart. Sorry, take it to the hourly chart. We got out here at 3,342 something this morning. Before we hit our stop loss yesterday, we were in a smidge of our stop loss. We got to just shy of 349. Yesterday we were still in it. Came all the way back down to entry, and then it's drifted back up this morning. So we got out this morning. I think it was 8 or 9 o'clock. Got out of that one, but I was losing 116 points on that gold market. But it's continued to move over. As far as gold trades is concerned, the weaker dollar, that's lifting gold. So 3,350 has been breached on that on the key data of the week, the US inflation data. So gold's lifting. So again, if we just go back to the daily time frame, we are found big support for the last since the end of May here, since we broke over the 20-day move. Now it's been our major support. The key thing earlier in the month was that the 21 EMA was over the 3,300 level. This level here, 3,300, is big support. And like I was short, I said we short this on the a flick back. It didn't work out, but never mind. That's trading for you. And we are now back up and back over 3,350. So positive gold, weaker dollar, and stronger stock markets is the upshot of the surprise weakness in US inflation. Let's have a look at some of the platforms, see what others are saying. The smaller index in the US, which we don't offer here on at theproptrade.com, but the Russell 2000 here, the smaller US index, is up over 1%. It's had a big old move. The Nasdaq up, the S&P cash futures market is up 0.3 of 1%. So it's a positive across the board on the stock markets, as we saw on our indices. Let's have a look where I was. Crypto 109. It's still holding up here. Today, Bitcoin at 109. The weaker dollar, it's obviously lifted. Again, just go back to the 5-minute. Sorry about us jumping around. We've got about the 5-minute chart. There we are. A weaker dollar on that weaker inflation number has lifted all of its alternative assets. Remember, all of these things are quoted against the dollar. So as the dollar goes down, the flip side of the balance moves to the upside. So let's have a look at the majors and see how we are moving. 65.50 is in sight for the Kiwi. Sorry, the Aussie, I should say. If we just go again, do these on the 15-minute. No, let's go back to the hourly chart. There we are. So 65 was being tested yesterday and today, and we've rallied significantly at 65.45 dollar CAD. It's back under 137. In fact, we haven't been able to breach 137 or hold the breach of 137 we saw yesterday, and we're down to the 36.50 zone again. And even with that weak Canadian buildings permit, so 136.34 is your next downside target for dollar CAD. That's that intraday peak, but the big area there sits at that 63.50 zone here. This low from the 5th and 6th of June. These hourly candles. The intraday is 136.35 for dollar CAD. Swissy's been the major beneficiary of the weaker dollar this year so far, and again we're back to 81.88 lows here this week. here on the hourly chart takes us to the 81.72 zone, and then below that we have 81.60 zone. So 81.70 and 81.60 next downside targets for dollar against the Swiss franc if this selling of the dollar continues. Dollar yen, more importantly, 144.45 into a support area already here on this 1 hour time frame. Next level below where we are now, 144.50. Will take us to 144 itself. So there's not a lot of movement. There's not a lot of support between 144.50 and 144 itself for dollar yen if this selling continues. But we are literally 8 minutes into the data. It's 13:38 here, and so we'll go back to the. We'll have 2 5-minute candles now. First one down there, you see, big down, and a bit of buying in the second 5-minute candle, but we are down. Russell 2000 is now up 1.32%. The Nasdaq 100 is up 0.5% now to the upside. Kiwi back over .60 very significantly. 60.25, and we're at 60.60, so 40 pip move for the Kiwi. There, euro, as we just said before, 114.75, 114.90 was that interesting high point in this second 5 minutes after the data. So somebody somewhere is got a bid on 115 on euro as we eye that at 114.75 at the moment. So we got a bit high, but we are moving to the upside. So the dollar weakness story continues. We just use the euro as an example. So the big news of the week is today, Wednesday, and euro's up significantly. And again, big support is all the way down under the key 114 area at the 20-day moving average at 113.60 now. So the trend continues. Sterling will be eyeing 136 again potentially. We came down yesterday and on Friday, but we into 135 is the big support area, and then we are up again today off the 135 area, back through it. We'd been under it most of the morning, but we've spiked up on the weak US data. In the UK, just as a caveat, the government have announced some huge spending targets, a big investment in a new nuclear plant. It was one of the headlines from yesterday. I haven't actually seen the data. What Rachel Reeves, the Chancellor here in the UK, has actually announced today. But it's a huge I think it's 1.5 trillion that we're talking about. They've made a significant U-turn on the winter heating allowance for many pensioners. There's lots more pensioners going to get that allowance now that was taken away from this winter. It's had big political impacts. So the impact is the 10-year is now 4.444. So we've gone from 4.4960 to 4.44. So the yield has come down a tad. 30-year is down very significantly from 4.4968 this morning, earlier to 4.9. Where are we now? 4.9029. So that's moved nearly 60 points as well. So and that auction is coming tomorrow. The 10-year is the one that's coming later on today. So in summary, quite a blockbuster reaction to the inflation data, expected to tick a little bit up, but it's actually weakened more than many would have expected. So there could be, I mean, the caveat of all of this is that the data is still pretty firm and still okay. It's not weakening. I'm sure, again, Mr. Besant and Lutnick and Trump will be banging that table quite hard, and quite understandably, because the data has held up. So the sentiment is running ahead of the data. So is the data going to weaken and then weaken quite significantly? So it also sort of feeds into the Fed's poor old Fed situation, where what's the incentive to cut? So inflation is disappearing. Or according to the data, they're talking about it being the rise in inflation potential that's coming is transitory again. They said, but there's no sign of it yet. But the bears would say, well, we haven't actually got any proper tariffs yet, have we? We've backed down. Trump has backed down many times. We got this relatively positive deal out of China, which is sort of cementing what was agreed a few weeks ago, or not agreed a few weeks ago. So they had to meet in London to bash this out. But again, there's not a great deal in it there. But both parties, China and the US, are both walking away saying this is a positive for us. So yeah, I'm still, my call, for what it's worth, I think it doesn't really matter what I think, does it? Is, we are a bit too early to call this on the impact of the tariffs and how the beleaguered or the very resilient US consumer in particular is going to deal with this over the summer months. But time will tell. So there's our calendar here. So inflation coming in weaker than expected. Keep your eyes peeled for the 10-year auction. Where's it gone off here? It's disappeared. Where's it gone? We've got obviously got the weekly crude. Where's the? Oh, there it is. Sorry, it's 5 o'clock, isn't it? It's GMT. Yeah. So the 10-year note at 5 o'clock GMT, 6 o'clock my time in London time. So that's the next key event of the day. Then we got PPI tomorrow. And the 30 note auction tomorrow. So we'll be here same time tomorrow for the PPI. PPI, remember, is the producer price index. It's not as market moving as the consumer price index, but it tends to front run CPI. So it'd be interesting to see if we've got a similar weakness in PPI tomorrow. If we just jump forward, not the UK data at the moment, jump to the US data. So again, that was expected to tick up a little bit with the core at 3.1%. So if this comes in under 3% tomorrow and comes in at 0.2 or 0.1% for the move in May, that would be it would be cock a hoop in the White House. 2.6%, again the annualized number. May 0.21% for the headline. Obviously, the weekly claims have been quite strong. Ticked up, didn't they, to that 22-month high last week at 247,000. Also, tomorrow still expect to be at that 242,000. So remember that 240,000 was a bit of an outlier, or had been pulled down every week since then. So again, the signs of the jobs market cooling, but or cracking, as I've showing some signs of weakness. And the inflation continues to go the opposite direction. So pretty positive data story for the Trump believers in the White House and his supporters. So there we go. So let me just leave you with a summary of what we've just seen. Weaker inflation out of the United States has hit the dollar. Euro is trading at 114.70, sterling at 135.35, and the yen at 144.50. Dollar CAD is at 136.60. The Aussie at 65.35 as we move forward. And the biggest mover of all so far this year, the Swissy is back to 82. I haven't been under the .82 level to 81. 85, so it's come back a wee bit there. Stock markets are stronger. Indexes are up. The Dow at 42,960 and moving to the upside, and that's spread across the channel as well. Sterling at FTSE is up. Got that 5-minute chart. The FTSE has held that gain. The DAX is similar sort of jump higher. And in Asia, the derivatives here on the Nikkei, actually it's given that back quite quickly, hasn't it? Is still up to the upside at 38,600. Gold also jumped on the weaker dollar to 3,350, went to 3,355, I think, and then plus 3,360. We're back to 3,350 now, so it's given back $10, but it's still bid on the weaker inflation out of the United States. So take care, everyone. There's no particular assets anybody wants to have a look at. It doesn't look like it. I will be back tomorrow, same time for PPI. Take care, be safe. And if you haven't got an account with us, why not? It's very, very straightforward. A few $100s gets you a healthy pot. We still got some discounts running. So these are our evaluation trades. It's straightforward, very open, very clear what the rules are. If you're a consistent risk-averse trader, we'd like to, like you trading with us, and you can end up making yourself some real cash. You can build and scale by applying your techniques. So if you're brand new 25 still gets a 25% discount. If you want a $50,000 account, it normally costs $345 with a 25% discount. That brings it down to under 260, gives you $50,000 of equity to play with. You need to achieve a 8% target and then a 5% target on a 2-step challenge. If you just wanted to do a 1-step challenge, we call it an express, you need to get a 12%, but you get to the funded account just in 1 step. The daily losses 4% and the overall loss is 7%. So it's tighter, obviously, on the 1 step, but your funded account is available just in the 1-step maneuver with the if we go, so that starts from $55. If you want the 50,000 account again, we can. It's still $260 for the 1 step for the 50,000 step there, and profit share from 80%. So come and join us. You got nothing to lose. Well, that's strictly true, is it? You got your challenge price, your investment to lose potentially. But if you get to the funded account, which many people do, you get that money back, and then any profit you make, you get 80% of that in real hard cash as well. So you very quickly recoup your challenge price as well. Okay, so take care, everyone. I'll see you all again tomorrow for PPI. In the meantime, may the pips be with you, and